Carl Icahn, oh boy, Carl Icahn says there very well could be a recession, or even worse. Oh boy, okay, we're gonna read through that. I'm gonna give my 2 cents on that. Sounds very, very scary. A billionaire making these sorts of comments, and I always think when I see this, I'm like, man, do they really want to buy the dip that bad? But we'll read through it. We'll give this respect, and I'll give my perspective on this. Okay. Now, if we're looking at the markets here today, oil is kind of going beast mode here today, up to 114. VIX is spiking up a little bit, mainly because the market's selling off. We're still at an elevated VIX. It's come way down at 23 now. Wasn't that long ago that we were much steeper than this. If we pull up like a 1 year, for instance, just back in early March, VIX went crazy. It was like 36, 37 range. So we've come way off that, mainly because the market's been bouncing back. If you look at the S&P 500 today, down about 1.2%. Russell, big downward day here, 1.7%. Obviously, it's up significantly off the lows. If you pull up like a 5-day, 1%, but then you back it up a little bit more, we're up about 6%, 7%-ish from the actual lows. So right about 7% for the Russell. European markets were red, Dow down, and as far as the NASDAQ goes, 1.3% down here today, but NASDAQ's obviously had a tremendous kind of bounce back. So today's one of those days, right, when you're kind of in a rally where it's given back some of those gains. It definitely does not seem like any sort of, like panic out there. It just kind of seems like one of those more natural days where, just kind of the market's taking a little breather here. Planet up today. Tesla, look at Tesla holding strong. Like, Tesla's been pretty flipping amazing recently. I got to say that. I think it's just, in these short-term time periods, a lot of it is driven by sentiment and those sorts of things. And for Tesla, this stock just to hold this strong on a day when the Nasdaq's down 1.3%. Just kind of speaks volumes to the shareholder community that Tesla has. It's pretty darn amazing. Other than that, there's not a lot of huge moves. Skyworks is down 3% today. Voyager down 3% today. Qualcomm down 3% today. Avant's having a great day today, but there's not a ton of like big red today that I'm seeing. Obviously, it's going to be more of a red day when you got the Russell down that much. If we pull up travel stocks, a lot of red, but even with oil going up as high as it is today, it's not like travel stocks are getting destroyed today or something like that. So, I definitely think there's some opportunity in travel stocks. Obviously, I'm not a trader, so I won't be trading any of them. But if I was a trader, I would, at least be taking a peek at travel stocks for the next 12 months. Let's call it that. If we pull up my watch list of stocks I'm watching but I don't own yet, there's definitely some decent downward moves here. Purple down 9% today, so that's a pretty big move there. Square 4.5% down. Stitch Fix about 4.4% today. MU 4.3%. MU is kind of getting in a little rut now. I'll be honest when it comes to MU, which is the biggest memory chip play. This one peaked out, well, as far as a recent peak out, was back in February at 96, and it had been holding strong, but now it just seems to be kind of falling apart a little bit. So Sam, bad day. Sam's actually a really interesting investment opportunity in my opinion. They own Sam Adams, like the beers and whatnot, the Boston Beer Company. They own many other big brands and Truly as well. SoFi, still doing research on SoFi, trying to figure out what's there. That's why it's on this watch list here. Shopify is giving back some of the gains it's had recently. That one's come back pretty darn strong recently. If we pull up from the lows, about 21%, 22% off the lows. So, yeah, that one's had a big bounce. Oh, actually, even more than that. Here's actually where the lows was, 30%. Jeez. Shopify's come back 30% in the snap of fingers. Like, that's how fast it happens when you get the market to flip a little bit. It's incredible. Upwork, not a lot of other kind of craziness going on as far as that watch list. Big tech, we pull up this watch list here. Adobe, big downward move. I'm going to have to research what's going on with Adobe. That's a huge move, 9%. What in the world? So it looks like Adobe had earnings. Adobe shares plunged 10% after Russia invasion of Ukraine leads to reduced sales forecasts. Adobe reduced its fiscal year forecast late Tuesday, citing the impact of halting sales in Russia and Belarus. Analysts lowered their target price estimates for the fiscal year and reflect the company's updated numbers. So, yeah, it looks like Just like kind of Adobe's in a tough spot short term. But at the end of the day, let's not forget Adobe's a flipping amazing business model. Like literally, one of the better business models I would say in the stock market. It's not a stock I personally own, but you can't deny that it's just a beautiful business model. But geez, yeah, that's been quite a drop there. From basically where the stock was in November. But you can say that about a lot of stocks, to be honest. Nvidia down about 3.3% here today. Intuit, another one of my favorite business models out there, down about 3% here today. Tesla's a green and Apple's a green. Apple just continues to be that hideout stock where, in shaky days, in a shaky market, people love to hide out in Apple stock. It's interesting kind of how that's going. Check out Chinese stocks here today. Chinese stocks, kind of a mixed bag here. Baba's up, Tencent's down, Neo's up, and JD's down. So a little bit of a mixed bag when it comes to Chinese stocks. And last one up here is the plant-based stocks. Chef down today, Oatly down today. Looks like Very's up, and Beyond's down. So kind of in line with what the market's doing, okay? So let's jump into these Carl Icahn comments here. Obviously it sounds scary. I mean, there's no doubt when you see a headline like that says there very well could be a recession, even works. Yeah, it's definitely fear-driven commentary. Famed investor Carl Icahn said Tuesday an economic downturn could be on the horizon, and he's loaded up on protection against a steep sell-off in the market. He says, quote, "I think there could very well be a recession or even worse," Icahn said on CNBC's Closing Bell Overtime to Scott. "I have kept everything hedged for the last few years." Okay. Last few years, it's relative. Is that like 3 years, 5 years, 7 years, 9 years? "We have a strong hedge on against the long positions, and we try to be activists to get that edge. I am negative, as you can hear. Short term, I don't even predict." All right. What? Speak in English, please, sir, because I am negative, as you can hear. Short term, I don't even predict. Okay, so you don't predict short term, but obviously you're placing bets that maybe your positions could go down short term. So you have to be at least somewhat of the belief that the market could go down a bunch short term, something like that, right? As somebody like myself, I don't do any hedging on the downsides of the market or whatever. My hedging is like if the market goes down, I buy stocks. That's kind of the way I view it. The founder and chairman of Icahn Enterprises said surging inflation is a major threat to the economy, while Russia-Ukraine war could only add more uncertainty to his outlook. The Federal Reserve raised interest rates for the first time in more than 3 years in an attempt to battle inflation that is running at its highest level in 40 years. Federal Chairman Jerome Powell this week vowed, though this action or tough action on soaring prices. See, here's the issue with that, right? It's so silly. By raising the interest rate, it's not going to pull down what the oil price. That's not the way this works, and it's not going to make a cucumber be less expensive because you raised interest rate. Okay, that's not the way this works. So it can work in some instances, such as housing. Right, you raise interest rates, and let's say the interest rate to buy a house, let's say, is 1% higher than it used to be, or 2%, or whatever. Well, okay, that could slow down the housing market. You can maybe slow down autos, right? Something like that. But for a lot of the things that people have to buy, it doesn't move pricing on that. That's just not the way it works, okay? I really don't know if they can engineer a soft landing, Icahn said. I think there's going to be a rough landing. Inflation is a terrible thing when it gets going. Sure, okay. Icahn, a longtime activist, investor, and so-called corporate raider, said he believes the system of company boards needs to be fixed and weak management could lead to disasters. There's no accountability in corporate America. You have some very fine companies, some very fine CEOs, but far too many that are not up to the task, said the long-time activist investor. To position for a recession in America, Icahn said he's betting against malls in commercial real estate. Okay. So, there's not a lot there. That's just disappointing. That's what I'll say about that. It's just kind of disappointing. There's not a lot there. It's frustrating because anytime any of us can make a big prediction like, oh, there's going to be a big recession, man, and you just wait, it could be even worse. It could be a depression, and it's like, you could always say that. Like every year, you could always say that. That's the way it is, right? But it's very frustrating if you don't go into the details of exactly how you get to that point. Like, let's take us to, and a lot of times what it comes down to is people don't want to get into the details, because once you start getting into the details, you can start tearing apart that thesis, right? So it's much easier to just say, there could be a big recession coming, and it could be even worse, could be a depression, right? It's much easier to just, say that, not really go into the details, tell us what we already know, inflation's really high, okay? Because once you start going into the details, that's where folks can start tearing it apart. It's kind of like politicians. You ever notice how politicians will make some big overarching oh yeah, we're going to do this, but they don't go into the details most of the time on how they're going to do that. And it's funny because a lot of the politicians that actually get those, put their step-by-step plans out there, those people don't end up winning because people end up starting to destroy those step-by-step plans, right? And it's funny how that works. But if you're a politician, it's better to just kind of be like, oh, we're going to do this, we're going to fix this. And it's like, well, how are you going to do that? But most people don't ask that question, right? Most people are just like, yeah, you're going to fix this. Woohoo, vote for you. And it kind of reminds me of a situation like that. And it's like, get into the nitty gritty, take us all through this. When does this play out? Because just saying, there could be a big recession, and I'm not gonna say when it's gonna be, but it could be a big recession. It's not doing anybody any good. It's just like there's going to be a big recession someday. We all know that. When is the next big recession? A year from now? 6 months from now? 6 years from now, 12 years from now? That's a fun debate if you're going to talk about it. But just saying, and then it's going to be like, oh, I called it. And it's like, come on, man. Like, get into the nitty gritty. Let's get in the details there. We need better than that, because that type of stuff, all it does is cause fear. All it does is cause fear in the market. Oh, Carl Icahn, billionaire, just said could be a big one, man. Big recession or even worse. And it's like, where's the details on that? Come on, man. So anyways, guys, that's my opinion on that. We need more. We need better than that. And I hope CNBC really pushes, because CNBC is the one that has all these folks on. Hope CNBC in the future really pushes these people to really go detail by detail and exactly when this is going to play out, because, to just make this overarching big and not come with the something behind it, it's lame, man. Especially for the stock market, which is a community that's much more educated and can think about these things. And it's not like you're running for political office or something here, and you can just trick people into something. Like, let's actually talk about it, let's debate it out, and we can kind of go from there, because that's better, right? So anyways, guys, thanks for joining me. As always, much love. And also, if you want some free stocks from Moo, check out pinned comment down there, and have a great day.